Welcome, everybody. I want to thank the panelists for joining me. We've got a lot of people on the Zoom, so to keep everyone timely, I will start with some quick introductions. I'm Dylan Simon with Kidder Mathews. Me and my business partner, Jared Anderson, run our multifamily investment team, selling apartment buildings and development land throughout the region. Really excited today for this panel. We've got three absolute industry veterans and professionals. Do a quick intro. We've got Jack Beaudoin with Venture General Contracting, a partner in the firm, Matt Marr, SVP at Banner Bank, and Trent Mummery with Trent Development, both the founder and principal at the firm. Going to take a couple of minutes for some self-introductions. Jack, if you don't mind kicking us off a little bit about yourself and your firm.
Yeah, sure. Hi, everybody. Jack Beaudoin. I have been in Seattle for 32 years of my career, working for a large multinational firm, and then started our own firm with my partner, Matt Parent, and also Darren Postma on Venture General Contracting. Right now, we specialize in a lot of multifamily work, but we also do commercial historic repositioning, and we do a lot of different TI work for some of the big tech firms and labs and whatnot. Some of our key projects that we got going on right now, we're doing a large repositioning in Bellevue. What used to be the old Rock Bottom Brewery, you may know over there, and large repositioning down in Tacoma for Unico, turning a historic 18-story into apartment buildings, and then also a 31-story apartment building in South Lake Union.
Excellent. Thank you so much, Jack. Matt, wouldn't mind telling us a little bit about you, your bank, and maybe a project or two you guys are financing right now?
Sure. Dylan, thanks for having me, and good morning, everybody. My name is Matt Marr. I'm the Income Property Director for Banner Bank. Banner Bank is a $16.5 billion regional commercial bank operating out of 5 Western states. My group is the Income Property Division, which is a part of the greater real estate, commercial real estate division. We focus on being a resource for wide variety of clients and providing a full range of CRE lending products, cash management services to our clients. My team is comprised of a group of CRE professionals, and we focus on providing construction, bridge, and term financing for the purposes of acquiring, developing, or renovating any number of commercial property types, including multifamily, office, retail, industrial, and other types. We lend throughout the Puget Sound region and the Western United States. And we've had a strong history of lending into multifamily across the Puget Sound with a number of projects ranging from garden style in the suburbs to urban core podium. We've got a number of projects. One good example is a podium style in the Beacon Hill neighborhood, which had started prior to the pandemic and started to be delivered in the midst of it. There was a period of time where we were concerned about it, but the trends in history on that project have just absolutely blown up recently, and is attributed to great work by the management team and development team. So happy to be a part of it.
Excellent. Thanks so much, Matt. Trent, a little bit about yourself and Trent Development, and you can pick a project or two. I know you have a lot going on, but maybe a couple to highlight.
Sure. Thanks, Dylan, for inviting me to the panel, and good morning, everyone who's out there watching. My name's Trent Mummery. I'm one of the partners here at Trent Development. My name might be on the door, but my business partner, Patrick Ashman, and I are co-equal partners in everything that we do. So my background started in Vancouver, British Columbia after high school. I was in the construction industry and sort of just worked my way up the ladder, and ultimately became a general contractor in Vancouver, and immigrated to Seattle in 1995. And we were doing a bunch of AC rehabs and condo conversions and whatnot down here, and eventually transitioned from the general contracting world into the fee development world, and now development for our own account. So Pat and I have 1,700 units that are actively in our pipeline right now. We've got 5 that have gone vertical starting this year, and 2 more that are going to break ground here in a couple of months. So we're definitely busy in the multifamily space, and been pretty fortunate to discover the opportunity zone world, and we've got a lot of projects in the OZ world, and it's been an extremely busy year.
Excellent. Trent, kicking things off, would love to just talk about one or two of your projects you're under construction on now. If you could talk to the people who are on the call and just tell a little bit about location, size of the projects, and what's going on with it.
Yeah, we've been focused, sort of TOD focused, narrowed that a little bit to layer in opportunity zones as well. But we're up and down the I-5 corridor in, as I said, 7 different locations. So we've got a project up in Bellingham, 196 units up there that broke ground earlier this year. We've got 165 units in Core Everett that they just topped out 4th level of concrete the other day, and framing's underway. We've got a big project in Linwood near the light rail station that's going to break ground here in a couple months. Got 275 units at the corner of 12th and Yesler, right at the heart of Yesler Terrace, and one just down the street on Rainier, another couple hundred units down there. Got a smaller project in SeaTac right by the Angle Lake Station. That's going to break ground in a couple of months. And then we just broke ground on 360 units in the Hilltop area of Tacoma. So Bellingham to Tacoma so far, and we'll keep going north and south as needed. Excellent.
Matt, could you give us a highlight of maybe just a couple of projects on the multifamily side where you guys are currently, out with capital in developers right now?
Sure. Yeah. In my introduction, I mentioned we've got a podium style project in Beacon Hill neighborhood here in Seattle. We also are working on a podium project that will be breaking ground here shortly in the Kirkland neighborhood. We also push south and run everything from have a number of garden style projects in the suburbans in the Lacey Puyallup area and surrounding Tacoma, in addition to some Tacoma podium style projects. So we're well diversified across various podium and garden style and the whole Puget Sound region as a whole.
Excellent. Well, I think we're going to hear more about Tacoma with Jack. I'm catching a trend here. Jack, you want to talk about just a couple of the projects you've got going on around the region?
Yeah, sure. We just finished a 256 unit out in Redmond, just got TCO recently. The high rise we're doing is 336 units. The repositioning down in Tacoma that I mentioned earlier, the building from the Depression era, is 156 units. Right in the heart of downtown Tacoma. We're also doing a micro unit project that we took over from Katera, going out of business, going up the hill towards Hilltop, not quite the top, but just a couple blocks up. So we're seeing more work down there, and we're definitely seeing a lot more work, as Trent was saying, up north. A lot of things pushing north is what, outside of the east side, number one, but also a lot of activity going, Montlake Terrace, Linwood, out with the transit, but also near 99.
Excellent. Well, for those of you who track the market here, in the last market cycle from 2010 to 2020, developers built about 70,000 apartment units across the region. Probably a good 75 to 80% of it was in the urban core. Mostly call it west of 405 up to Ballard, down to the bottom of the lake. We're seeing a big shift now. I think this panel is very representative of that. Trent, you mentioned opportunity zones. Can you just talk a little bit about like the demand side, just from your capital, your own and investors, where they're looking to do projects and how that may have shifted in the last couple of years?
Sure. I mean, Pat and I were pretty lucky. We jumped in with both feet into the OZ space right at the inception of the program. And then, frankly, I don't think that several of our projects would have got funded over the past couple of years if it weren't for the OZ program. I mean, the money, it's very patient capital. Obviously, it's got to sit there for 10 years. There's some aggregators out there that have amassed a tremendous amount of equity to deploy into these projects. So they're looking for, it's got to be a strong real estate deal. It doesn't make a good deal, or it doesn't make a bad deal good. It makes a good deal better. So, I mean, early on, we went out and found quality real estate sites that just happened to be in OZs. And like I said earlier, we were already in the TOD space, and we just kind of narrowed our focus a little bit. For example, the reason we're in Linwood is most people know that the projects we've done in Shoreline. Well, there's no OZ in Shoreline, and there's not an OZ at Mount Lake Terrace either, but there is right in the heart of Linwood, near the light rail station. So it was kind of a no-brainer for us to pick Linwood. And that's what our capital likes. They like strong fundamentals. Doesn't have some like core, some don't want core. So we've got a pretty good mixture of capital sources that like I said, it's patient money, and they're just looking for a quality location.
Trent, just to tie on that core, you're working on a project on 12th and Yesler right now, which is Seattle has not been a focus. How have you seen in your investment group? Are you seeing continued interest in Seattle? You've got a big breadth of projects, but do you see more projects coming in Seattle?
Yeah, I mean, a good example is the capital that's behind our 12th and Yesler project is also the capital that's behind our Tacoma Brewery District project. So we're looking at another site in and around Yesler Terrace for that same group, and we're also looking at another site in Tacoma for that same group. So just they like both locations.
It's excellent to hear. I've always thought of that corridor down 12th as an extension of Capitol Hill, and it's kind of fun now to hear Capitol Hill in the same conversation with the Brewery District in Tacoma. It shows how much progress we made this last cycle. Jack, turning to you, you're doing an adaptive reuse project in Tacoma. Can you talk a little bit about that project and the dynamics of that, and then maybe take us north from there about the projects you're working on the north end?
Yeah, I mean this building was built in the 20s. It's basically a structural steel frame that is clad in clay tile. The floors are this clay tile flat arch. Really, I've done a lot of historic renovations in Seattle and in Tacoma in my career, and I never saw a structure like this. So it kind of scared me a little bit looking at it. But CPL said, "Don't worry, Jack, you'll be fine." So we've been fine. It's a pretty strong building for some weird kind of Anyway, I digress. So you have to do it. It's like Seattle in a way where you got substantial alteration that you have to consider. The structural stability and upgrading and updating that, and you have to look at the life support, life safety systems in the building. Also old mechanical, old electrical, old plumbing, old everything has to get ripped out. In this particular case, there was hazmat, asbestos, all that's got to go. All the walls in there, the office walls were all clay tile, ton of demo, huge weight taken out of the building, and then go back in and do this massive structural work. And at the same time, figure out how to sequence in all the apartments, because it's schedule's king, and you just got to be, so you're top down, bottom up. It's a complicated construction project, and you run into a lot of things you weren't expecting. But we're at the part now where we're finishing up the structural. We're doing what I call the parade of trades, which is just the finishes sequence from drywall all the way through doing your appliances. We're in that mode, cranking through it. I will tell you, this old historic building and the views and what you get down there in Tacoma, which Tacoma rents are a little bit lower, but it's going to be gorgeous. I think it's going to be a real home run down there. I mean, the neighborhood's nice. I mean, you're not that far, from what Trent was talking about with this, I think the Brewery District that you're talking about. There's a lot of great shops, restaurants. It's a fun area. So it's pretty vibrant down there. It's really refreshing. It's like Seattle 30 years ago. It's pretty cool. But, we are working more up north, and the projects we see are a little bit more suburban. So the ones that we've done in the past have been more, what I would consider garden style, not with podiums and with on-site parking and things like that. The mixes have tended to be very different, more 2 bedrooms, bigger 1 bedrooms, parking's more parking. turned out that the better parking was a lot or a space per bedroom, not doing these matrix that you see in a lot of other areas. Very little parking in Seattle, a little bit more parking in Bellevue, a little bigger parking in Bellevue, kind of like that Kemper. Those seem to be the big things that we go through a lot in pre-construction, is a lot of analysis on that and what people want. And the more we see, that's the harder part, is just what do people want moving forward? What's the market going to be moving forward? We see a lot of the same stuff, but it really varies based on area. And the further you get out, the more north you are, the less the urban decisions are made. More suburban decisions are made, except like, I think what Trent's doing with you're around the transit, you're probably looking at more urban type decisions because of the rail. And, hopefully we'll get to looking like Vancouver someday.
Yeah, it's an exciting future. Turning to you, Matt, it's a wide swath for a bank to look at funding a variety of different developers across the region. You guys are in 5 states. How have you guys, or have you shifted locations of preference in the last year? And how are you looking at these different locations, from urban projects in Tacoma to, starting to see podium projects in places like Montlake Terrace and Kent? How is the bank absorbing these shifts in the market and responding in outlays of capital?
Yeah, Dylan, you had mentioned when you kind of kicked off this segment about the sheer number of new supply that had come into the Seattle core. And so a number of years ago, prior to, the end of the last cycle, we had made a very conscious decision to kind of push into the outer rings, or, both north and south outside of Seattle. And so that trend for us personally had started 3 or 4 years ago, and has really only become more prevalent after last year. In the lending community, we're a bit of a lagging indicator, right? Projects have gone through entitlements, they've sourced a lot of their equity, they then come to us for the final piece of the capital stack. But what we have seen is there continues to be that push from the urban core into the suburbs, or the kind of outer rings. And so that's a focus for us. I think in recent months, we've seen some strong trends returning to the urban core, but that target's just a bit tighter. The fundamentals within the urban core, due to the cost of land, due to the cost of podium style and high rise, the feasibility just gets tighter on those projects. When you move to those outer rings, especially when you're moving into a different project type like garden style, or podium in locations where the land is not as expensive, it provides the developers quite a bit more leeway to make those projects successful, which from the lender perspective also works for us. So we've continued to push. I would say 60 to 75% of what we're looking at now is outside of Seattle. We have pushed into the east side, but then also pushing down south and north as well.
Excellent. Well, we're talking about a lot of locations, and probably different locations, and many people on the call have really been used to hearing about from the development community. Jack, you mentioned dealing with substantial alteration in Tacoma. It's something we hear a lot about in Seattle, and just the costs associated with complying with the city. Trent, turning to you, you've started early going into opportunity zones, looking at other locations. Can you talk a little bit about entering new municipalities and just how it's been going to areas that haven't really seen that much development, and now they're starting to see a pipeline fill up? How's it been working with any? And you have some good stories and bad stories about different municipalities.
Sure. No, it's a great topic, and it was a breath of fresh air to go to these other municipalities. I mean, we had done 3 projects in Shoreline already, so that was obviously different than the experiences we've had in Seattle. But I think the first time we went up to Bellingham, I got a hug from one of the people behind the counter. I mean, they were so excited to hear us talking about bringing 196 units into that area. So they were fantastic to work with. The Everett permit department, we met with them, and they were talking about our permit timeline in a matter of weeks, we're used to years in Seattle. And so we're thinking, okay, it's going to be months in Everett, but they started talking in a factor of weeks. So it was it was pretty refreshing to hear those numbers. CTAC's been the same. I think we're going to turn the permitting process around in about 10 months from submittal to pulling a building permit. So Tacoma was very fast as well. Linwood's been great. I mean, everything but Seattle's been great. I don't have the East Side experience that many on this call probably do, and but our experience in Seattle has just been abysmal, like it has for everybody else. I mean, our Rainier project is on year 5 of the entitlement process. I mean, we finally got them up in year 4, and we're phasing the building permit, and we've got the first phases out, but the second and third phases aren't out yet. So it'll be a solid 5 years by the time those permits turn around. It's crazy, the difference between what happens in Seattle and what happens in the outlying jurisdictions.
Absolutely. Jack, from experience with just cities and getting through the process of construction and various approvals, how's it been on the construction side, working, you're in a variety of locations. What has your experience been like as far as just getting through all your approvals in the different trades?
Well, I mean, everybody has their own processes. The utilities that you deal with is also a factor for us. Whether you're in Seattle dealing with City Light or you're elsewhere dealing with PSC and other municipal electrical systems, they all have their challenges. They're all different in how they look at things. You just got to understand how each one of them works. It's hard to get people's attention, because of COVID. It was hard before, it's worse now. And they can blow you off, and you get a lot of delays. But I would say, when we work out of, it's interesting when you work out of the area. So let's say you're up in unincorporated Snohomish County, for instance, and you've got an issue with interpreting the code on some drywall fire rating kind of thing. You'd think they'd call Seattle. Nope, they don't call Seattle. You'd think, and they go, oh, let's go, talk to Everett. Nope, they don't talk to Everett. They call Bellevue. They want to know what to do. They call officials in Bellevue to get guidance and support on what to do. So, and you run into different things like that, and a lot of them are very easy to work with. We've done projects in Kent, and the guy will just come over and walk over from from City Hall and work through it with you. Now, they're a lot more anal when it comes to getting things right. In places like that, and they don't have huge resources to work from a lot of times in those municipalities. But I would definitely agree with what Trent's saying on our side. You definitely feel that it's quite a bit easier. But I'm not saying that getting permits or getting inspections and all that kind of stuff. Working in Seattle as long as we have, the system on that has been pretty consistent. From our side of it, it's just the support of City Light can actually get you power. They're actually going to move the power lines. They actually do it right the first time or the third time. Some of that stuff gets to be really old, but that's the people factor of our business.
Well, I'd say probably most people think coming into a new jurisdiction is hard. They just don't have the experience with development, but it's great to hear that municipalities throughout the region are welcoming developers with open arms. It's definitely a different narrative than developers get from both the press and SDCI here in Seattle. Changing subjects a little bit, costs have been rising, zoning's changed. We're looking at some different product types. I think pretty conventionally, we've talked about garden court, podium, and high rise, but we're starting to see some different construction types with each one of these. Trent, you're doing a CLT project. Could you define what that is? Talk a little bit about the project, where it is, some of the complexities you've had to solve for, and would you do another one in the future?
Sure. So CLT is cross-laminated timber, mass timber. There's several different acronyms out there, but for the most part, cross-laminated timber is the more prevalent one. And we're doing that in our Bellingham project. It's just one level of CLT. So rather than a concrete podium and then a stick wood framing above that, we elected to do a CLT podium with wood framing above that. So we've got one very large floor plate of CLT, and a good portion of it is going to be exposed to the underside. It's a 20-foot ceiling. It's a double height space. So we've got these 2-story townhomes, and then all of our amenity and leasing and programming spaces are below the CLT podium. So it's going to be a very rich, warm look, rather than having a concrete lid, and perhaps a gyp ceiling over that concrete lid, or an exposed concrete lid. We'll have exposed CLT. So really looking forward to seeing it. It's not here yet. We'll definitely do more of it. I think it's in our future. We're going to have more and more CLT projects as time goes on, and we like it. It's been a nightmare, frankly. The front end process is much more difficult than I mean, we went in with our eyes open and expected it to be difficult, but it's been even more difficult than we thought. So I just would warn everybody, you got to plan more time. We believe we have the right people as far as our architect and our structural engineer and even our supplier, but all the MEP design that has to be front loaded into these things. If you're doing traditional mid-rise product like we've always done, the vast majority of that has been bidder design. It kind of happens a little bit later in the process. So you have to have it dialed in at the beginning with your CLT package. So with the good Lord willing and the creek don't rise, we're going to get our shop drawings approved here in the next week or so and go into production. And then we're using a group out of Austria. So hopefully our boat doesn't sink on the way over and then we lose all of our CLT product or get held up in a port, or I guess it won't go through the Suez Canal. So we should be okay there. But there's just a lot of different things that you've got to factor in when you're doing a CLT project. So just know that going in on the front end, but we're definitely going to do it again.
Trent, the decision to go CLT, can you break down how much was driven by ultimate aesthetics versus costing versus time?
It really was aesthetics. We didn't think the time was going to be worse. That's a mistake that we made as far as the timing part. It's slightly less expensive than the concrete podium, and it's just going to look a lot better. So it was really, really driven by aesthetics. Yeah.
Excellent. Jack, you had mentioned when we spoke previously that you guys are constantly just looking at different product types. I think I've heard more than once when someone can't make podium work and they can't make concrete work, that the quick answer is light gauge steel, but we're just not seeing that many projects getting built. Can you just talk about a little bit about the different construction types you guys have just looked at internally, whether you've done them or not, but just talk to people that are listening today about what you've been analyzing to see what we might see in the future.
Yeah, I mean, we look at a lot of the same things a lot of people, design around and contemplate it. A lot of the stuff that drives the structural system is going to be the site, and there's very few flat sites around here. So, anything that tends to be more of an urban site or multi-podium site or multi-tower site, it's going to drive a podium. Things on a hill are going to drive a podium. Depending on how tall you want to go, is in the units you can get on the site. A lot of times that's driving up at least a section that's going to be concrete, not necessarily a podium per se, but you're going to have a mix of a concrete with a wood frame on top for that type of a product. Obviously we price those all the time. The idea that Trent talked about with doing the CLT at the bottom, if you've got parking down below and you got to have that separation between parking and the residents up above, I could see that being challenging with the fire rating you need in between. Some of the historic renovations that aren't necessarily apartments, but some are, have CLT as a component in it. And, we did look at Binderholz, probably who you're using, to do that, with you going into these old buildings and fitting in CLT, taking out the floors and fitting in CLT and then building on top with more apartments above. That's stuff we've looked at, that's stuff we have in pre-construction. So all those variety of things, as far as the light gauge that you mentioned, we do that a lot of studies on it. It just doesn't really pencil. It doesn't really seem to work when you look at going with wood frame, because you got the same drawbacks of a wood frame structure. It's a little bit lighter than a concrete structure. You still have concrete, so there's elements of it, and there's some other constructability things of it that are a little challenging with a metal frame building. It's not to say they don't get done, but there's also not a huge sub community that does it. You see a lot of these lake age metal frame buildings that get done for storage, and a lot of those guys come from California. They're not from here. They're travelers that come up to slap those things up, and they leave. So we don't have a huge workforce to actually build those here. They don't get done a lot. There's a famous one sitting over there outside Bellevue with a hotel that got started that's just sitting there. I don't know if I started that thing back up again. But a lot of what we see is it's a mix of concrete and wood, or it's just all it's all concrete.
Yeah, it seems like costing is driving a lot of this, so it's a natural segue to get into the costing discussion. Jack, you've been through a couple of cycles, probably more than a few people on this call, myself included. What are you seeing in the I'd say that anecdotally, what I'm seeing is podium style development is costing north of $450,000 a unit to build a stick frame multifamily in the city of Seattle or Bellevue. High rise is somewhere between $750,000 and maybe $800,000 a unit. Where do you expect us to go? We've had a hiccup in rents this last year. They're starting to pick back up in all regions. Do you expect, we talked a little bit about lumber futures when we were kicking off the call. Is your expectation we're going to be living with these high construction costs in the future, or are you starting to see some abatements either on the trade side or on the actual material side?
Well, last year, in many meetings and many chats with clients and looking at pricing, everybody was expecting pricing to go down. Everybody was expecting things to get more competitive and costs to go down, and they did not. And housing is expensive here, and workers live here, and they have to pay housing. And you guys as developers want rents to go up, so you're your own worst enemy, because you're driving rents up, and workers have to pay rents, and so then you got to pay more for workers so they can afford your rents. So it's your own damn fault.
We want higher rents than lower costs, Jack. Come on.
I know. I'm spinning it on you, baby. But anyway, so last year prices went up over 7% in our area. They didn't go down, and already the first quarter of 21, they've gone up 5%. So you're looking at a 12% cost change during COVID in Seattle. It's it's not helping, right? So you also have the volatility of the market, which is just commodities and really weird stuff. Like you can't get glue that sticks the PLAM together, so you can't get a cabinet, or appliances are stuck in the Suez Canal for some spun boat or whatever. So there's all this really weird stuff that's out there that's impacting projects right now, and it's just everybody's famously knows about timber prices going up, whatever it was, 600% or whatever. That's settled back down. I mean, we're pricing stuff $45 a square foot for the wood frame parts of the frame parts of a building. That's since come back down into the low 30s, but is it going to go back into the 20s? People don't think so. So those kind of things have that once they go up, it's hard to get them back down. And it's like, look at drywall. I mean, drywall is all double what it used to be. So that kind of volatility is in the market now. We're the main driver of the worldwide market, the United States is, because the rest of the world's a mess with COVID. When that settles out and they get back into the market, the factories right now are doing just-in-time deliveries like they always have been. And there's just not a lot of capacity in the factories. So it's really, a lot of stuff's getting delayed coming out. It's like, yeah, we can get you your mechanical equipment in 16 weeks. Oh, by the way, it's going to now be 24. Oh, shit. So, I mean, that stuff's happening every day to us. And I'm sure we're not the only ones that's happening to. But so that when that settles out, I used to think, oh, maybe next year that'll settle out. I'm not so sure anymore that that's going to settle out. But until the rest of the world economy gets back up to speed, I think we're going to continue to see this kind of volatility in the market where things are going, up and down. And we just got to really be diligent and check on things. So we got to be a lot more diligent in what we do to control our costs. We just had a bunch of union agreements got signed this past cycle. They were tough, but they all got done. So that's a good sign. There weren't any strikes. Now, the reason I talk about unions is unions, obviously drive labor costs for a portion of the market, but the other portion of the market's non-union. Well, the non-union market has to stay up close to the union costs, or otherwise the union guys will scoop up the workers. So it does drive costs up even on the non-union side with what happens with the labor agreements on the union side. It's always less, but it's always not that far away. So we are going to be challenged with labor. And then the other side of it's just availability, right? So the availability of workers and companies to work on projects has softened. It's a little easier to get multiple bids on things, and you can get more pricing. And if you can get more pricing, it gets more competitive usually. So the bidding is a little easier and you get a lot more involvement, but that can go away like that. Everybody's sitting around, everybody thinks they got these projects, but no one's really sure what's going to start, right? So that's where the subs are right now, what's going to go, and they've got their eggs in these different baskets. And if some of the stuff does get started off, some of these larger projects that are out there, it's going to, availability of companies and people really is going to get harder again. But right now it is a little soft, but it can go away in a second.
That's really insightful, Jack. It's interesting to hear about how, just understanding how the labor markets are correlated between union and non-union workers, and just the understanding that the busier everyone gets, the more demand for housing and pricing goes up. So we're likely in an inflationary environment, but we've got these externalities that we can't really control with the global labor force and production force.
Well, I mean, I used to, for a lot of my career, I worked for a very large construction company, and we had a lot of access to that information, and we were a union company. So now that I, work at a firm that's not signatory, I have a unique perspective on how they interrelate, and it's that's what I see. I'm not saying I'm correct, but that's the way I look at it.
Thank you. Matt, it seems like 2020 lenders were out of the market for a portion of the year, pulling back, waiting to see what's going to happen. It seems like once we struck at least the second quarter of 2021, the lending market came back. So you guys are out underwriting projects, funding loans. How are you dealing with the costing side when we're seeing escalations from when you guys are putting out term sheets to actual construction draws that are leading to potential cost overruns? From the lending side, how are you guys dealing with just this volatility in the market when it comes to costs?
Yeah, you're right, Dylan. I mean, what we have started to see is just that gap period between when we get to an agreement with a client under a term sheet and when we actually close on the loan. There's been so much volatility in the cost side of things. That means that, we have to be much more nimble in how we structure our loans, how we, go back and resize or restructure the loan, because costs do climb over that period of time. In another area that we continue to see, a smaller gap in feasibility. So, the delta between the cost and the stabilized value, that delta continues to squeeze, and that is a concern. Now, for a lot of the projects, especially clients that have a bit of kind of a land bank where they're not having to go out and are paying exponential prices for land and the cost to build, those projects still make a lot of sense. Where you really see that feasibility start to get squeezed and then sometimes invert is the projects that people are going out, or developers are going out buying new sites and then going directly, entitled sites, going directly into getting new bids in this market. And that's where it's been really, really tight. And to make those projects work, most developers have to trend their rents. And in some cases, by doing that, the lenders do get a bit weary in that space. And so that's where we see those impacts. But it has been nice to see that at least the rate of climb and some of those costs have settled down. But it's not only just a issue of cost climbing. It's everybody, and we were dealing with this prior to 2020, but it's the number of general contractors competing over subs. And so it's not only a cost side of things, but it's also a labor side and just an availability issue, which all of that comes together into a bit of a perfect storm. And so it just requires that the lenders and the developers and investors are working very closely together through that process until you can get to a finalized GMP contract and actually get a shovel on the ground.
Yeah, we're definitely threading a needle right now, especially with the volatility in rents, trying to figure out where they're going to land. And trending rents was a very dirty word last cycle, and it seems like it comes back into vogue in certain times. Jack, one question came in that we'll answer on the fly here to the extent you feel comfortable answering it. Are you seeing much difference in, assuming the same product type, cost to build in the urban core versus in more suburban markets? Is it, I guess the overlying question, is it cheaper to build in the suburbs?
Well, I'll tell you, the cost, I've heard this before from another developer. The cost of a 2x4 is the cost of a 2x4. So cost of a 2x4 in Bellevue is the same in Tacoma or Linwood. Cost of concrete's the same. Maybe the subs that you're working with, in an area, work at a little bit different price point, but we don't really see that big of a difference because the cost in our area and a lot of stuff we get is from worldwide markets too, right? So, like an elevator is an elevator. When you start breaking it down, a window's a window. It's just the labor efficiency. We're tackling it personally a different way to try and be a much more efficient company in attacking how we work and how we get the information from which we build to increase our efficiency, because the commodities and everything else is pretty consistent across the area.
Understood. Anecdotally, I've had some clients say projects on the south end, they've got bid out smaller projects better from subs because they're just not commuting as far. And again, I've heard a little bit of that.
It's the particular contractors that you're able to work from. It's the profit margins they work with. It's the efficiencies at which they work. When we get overheated up here, they just throw every Tom, Dick, and Harry out there to do work. And there's a lot of very unqualified people out there working. It's just a body, right? And so, when we actually have a smaller workforce that's better trained and more controlled, we're a lot more efficient. And every company out there has a harder time with more people to manage those people and keep them efficiently working. There's a lot of people just walk around and don't get a heck of a lot done that you're paying them. All that stuff goes into a project. So, it's just getting the work done effectively, efficiently, and taking the thinking out of it. If you can get that figured out and become very efficient, then you're going to save money and you're going to save time. A lot of that's knowing what you're building when you're building it, and not just going out there and, oh shit, well, how the heck is this thing supposed to work? You can't have that crap. And so that's really where the differentiator is going to be, and that's where you can drive costs down. But when we get overheated in the market, there's a lot of, it's a neck down. You're hiring people neck down, right? So this part, when you engage this part, it kind of gets us in trouble.
Good point. We've got through most of the call without squarely addressing COVID. Trent, I'm going to turn to you. Just like to hear a little bit about your thoughts on trends. We're 18 months into it from a product standpoint of what you're building, whether it's unit sizes, amenity spaces, how you're thinking about apartments lived. What's the same and what's different now that we're a year and a half through this sort of new world as we're looking at a different lens?
Sure. From our perspective, it hasn't changed all that much. I'm not that smart. I think we got lucky early on that we were trending the way we were, putting more amenities into our buildings. Everyone's been building smaller and smaller units, so you've got to give folks somewhere to get out of their apartment and do things within the building. So we were already trending towards work from home, co-working before COVID hit. So maybe COVID's making us look smart. I mean, there's plenty of other people that are doing what we're doing. But we're just, so maybe we shifted slightly in our programming for the stay-at-home, work from home kind of stuff. A few more one-bedroom dens and less open ones. The programming of the co-working and the amenities, maybe a few more small pods and small conference rooms instead of just big open areas where people would congregate. So people can have a little bit more physical separation and then actually, you know, we're all living on these stupid Zoom calls. So people have to have a little bit of privacy and be able to talk and not be drowned out by the whatever else is going on in their surroundings. So just creating this environment for work from home. I know people have always been asking about HVAC systems and things like that. We haven't put a lot of energy into it because we don't have fully air conditioned buildings. I'm sure we would be doing something differently if we were talking about class 1 towers. We've got AC ports in the units, so you're not commingling the air from one unit to another. So not a whole lot of change in that respect. Probably, I mean, and we were already trending towards electronic door locks and keyless features, things like that before COVID. Sure, those will be all the talking points of this post-COVID world about touchless and contactless and whatnot. We were already doing it before COVID, and it's just more of the same.
Excellent. Matt, from a lending perspective, circling back a little bit on our earlier conversation about CLT versus light gauge steel and blending and a little bit of changing unit sizes and amenities, from a lending standpoint, how much does that impact your underwriting? Are you using that as criteria to choose which projects you lend on, or are you really leaving that sort of programming up to the developer and in underwriting the project more just on rental rates and track record?
Yeah, I mean, simply put, you know, we have a lot of reliance in our clients and our developer partners that, you know, they're making the best decision from a cost perspective for the project itself to make it as profitable and feasible as it can be. Now, we have lent on a number of CLT projects. Those have been predominantly for office projects. We have not seen that yet in the multifamily space, at least where we lend. You know, 95% of what we still see today is your traditional wood frame and concrete. And so, but as we do look at some of these other construction types from a lender's perspective, what actually, we don't focus necessarily on, does it make sense from a financial perspective of the project? Because we're looking at the eventual cash flow and the return and the value of that asset once it's built. But what we do have to pay close attention to is the different processing and payments for different suppliers and different projects, right? It's different paying a concrete subcontractor to come in and lay a podium versus paying a CLT contractor 180 days in advance, 50%, you have delays in delivery, all of that. So how we manage that from a funding perspective is different. And so it's very important that we have those kind of open discussions early. And to Trent's point, you know, sometimes as we get into these projects, when it's the first time, you know, our developer clients and ourselves, we think we understand what the process is, but as you get into it, it changes. And so we do learn on the fly a lot that way. But as far as different types of construction, you know, we rely on that, you know, our clients know best in that space for sure. Excellent.
Well, with 10 minutes left, we get into some of my favorite questions and a bit of a speed round of some more personal opinions and get to know your guys' thinking a little bit better. First question, we'll go Trent, Matt, then Jack. First question, biggest challenge in 2020, and did it get solved in 2021 or is it still out there?
Well, I mean, I think it's pretty easy to say this now because we were successful with so many projects. I mean, we're one of the COVID winners. We partially due to the OZ space. We never planned to launch 7 projects in the same calendar year. A couple of these were supposed to go in 19 and several were supposed to go in 20 and a few in 21. But because of the obtuseness of the OZ regulations when they first came out, the capital was just kind of frozen up. So everything got pushed from 19 into 20, and then with COVID hitting, everything got sort of bogged down as well. So yeah, COVID was obviously a problem for a lot of people, but it maybe helped us with just sort of slowing things down and enabling the capital markets to free up a bit for us. So I think that's definitely past us. And 21 is looking very good for us anyway. And there's just a ton of demand out there for deploying more capital into these spaces. So I think we're still going to have hiccups along the way because of, I mean, obviously the last couple of weeks with this Delta variant and whatnot is changing people's habits maybe a little bit temporarily, but long-term trends look very good for 21 and 22.
Excellent. I like to hear that. Matt?
Yeah, well, you know, you're talking to a lender and we get paid to worry, right? I mean, that's what we do. And so I would say that the biggest challenge for lenders and the industry as a whole was really human psychology, right? We were dealing with an unprecedented collapse in an unprecedented short period of time. And so dealing with really the what ifs was the biggest challenge for us. You know, as we triaged our portfolios, as we looked at what we had on the books, which were all quality loans and quality assets, that continued month after month to continue to perform well, to not show blips on the screen, but also overlaying that with the constant uncertainty and bad news that was coming out in everything you read. And so really our challenge was getting through that uncertainty and bringing ourselves back from the precipice of worry and getting back out and lending. And that's where I think, you know, what we pushed for my team and Banner Bank, you know, we fulfilled every commitment and term sheet that we had going into the depths of the pandemic. But, you know, there was a period where we slowed pretty substantially. And as you could start to see the light at the end of the tunnel, you know, once that uncertainty was abating to some extent, we really opened up. But I mean, it was an interesting time. Every cycle is different. I would say this last cycle was much more psychological impacts than anything else.
Jack, how about you? What was vexing you in 2020 the most, and is it solved or you're still working on it?
Well, I mean, initially it's like, you know, what the hell is this and what's going on? We were forced to shut down every single project we had going on. So if you're not building stuff, you're not employing people. So that was, you know, I mean, I can't think of a better term other than survival. Listening to everything coming from the governor and analyzing it and figuring out how to deal with it, how to put processes in place that you can read between the lines and what he's saying and what you can work on, what you can't, what jobs you can do, what you can't, what's critical, what's vital, in reading in between his words and trying to working with clients to keep jobs going if they wanted to or didn't, and getting direction from them and getting direction from the governor was an hour to hour, day to day, week to week thing. We met every single morning, every single afternoon for months, just dealing with it. So obviously, looking back at it now, it's settled out and it wasn't that bad. It's kind of like in 2007 when the whole world came crushing down on every single one of us. And it's like, oh Christ, certainly was different than the dot bomb blow up, right? So every one of them is different. How you deal with it is different. And we survived them all. It's the one bright thing I've learned from dealing with these things when they do hit and when they do change. A lot of times it's not economic or economic things that we're accountable to in our area that causes our recession. You know, in this particular case, obviously it was a global pandemic. once things got stabilized for us, we were able to look at, we're all working from home outside of people that are out on jobs, specifically running, because we had to work. So we had to put people working together. We had to work out social distancing, how to get people up in buildings, how to use hoists. I mean, there's a lot of logistical things of keeping people safe. People didn't know how you got sick. We were out cleaning, all kinds of stuff because they thought it was on the floor. I mean, obviously over time, well, you're not going to get COVID from the floor. It's all this stuff, but that wasn't the case back then. So we had, it's just was crazy town for us. So we got through it, and once we could stabilize, those PPP loans were extremely helpful. We were able to take the time to look at process improvements, the stuff I was talking about before with efficiency, and looking at modeling and how to work better with our design partners at figuring out what the heck the owner wants built. And let's figure it out first, and let's become more efficient as an industry, and let's change how we work together. So we focused on that, and we're still working on that. Obviously the volatility, and we're the ones that get to deliver the bad news about pricing. So, we're accountable to that, to our clients, and working with our subcontractors to best figure out jobs as to how to get things built. We're still at that peak of the market we're at all the time, where costs are really high. Rents aren't really, when rents were climbing, costs could go up and it was still okay. Well, we're at that point where it's not okay. So we have to work with people to be smarter and help affect design sooner, so that we can build things as cost effectively as possible. That's a real challenge. That keeps us up. And the other thing is, it's always the case. It's people, good subcontractors, and it's across the board. It's good architects. It's good laborers. It's good tin knockers. It's good, it's good owners. It's good, just competent people that, care and look at stuff. And, and it's not all solved with a freaking computer.
I think what I've heard from your comments, Jack,
that comment,
it seems work hard and work with good people, and you can get through 4 market cycles.
Yeah.
We've got a minute or two left. Very quick speed round. Same order. Next guy can go right after the first. Favorite location or favorite project you're working on right now?
Sure. I love all of my children equally, but we've got a few unique things going on in I would say 3 of our projects. So Bellingham, despite the difficulties of the CLT, I'm really looking forward to seeing that come together. It's got a really amazing amenities package, and it'll be a pretty unique project to that market. Linwood is it's a 2.5 acre site, and we've got like an acre courtyard, and then this massive, another massive courtyard on top of our structured above grade parking ground, an 8,000 square foot amenity space. It's just, the amenities in that building are going to be phenomenal for that location. So really looking forward to seeing that. And then 12th and Yesler, it's really the gateway to Africa Town. It's a gateway to Yesler Terrace, and we've got a pretty fantastic public art program that's going in there. We've commissioned, I think, 8 to 10 local artists and a curator, and the public art that's going to be on display both on the exterior and interior of that building, and integrated into the sidewalks and benches and things like that. It's going to be pretty spectacular. So I guess I've got 3 favorites out of our 7.
That works. Matt?
Yeah, I think generally speaking, there's opportunity throughout the entire Puget Sound region in all the markets. But just generally speaking, we're very bullish of the South Sound, especially South Sound kind of suburban garden style near employment centers, industrial, military bases, the port, all of that. We've seen that submarket really flourish, both in the midst of the pandemic and also continuing that trend now. So we're bullish in the South Sound area.
Jack?
I'm going to go off piste on this one. My favorite project is a redevelopment of a backyard for a 6-year-old boy that's disabled for Make-A-Wish that we just finished. Yeah, up in Stanwood.
That's fantastic. I'll wave by on my way up to Stanwood today. Well, we're a minute over. You guys have been very gracious with your time as well as your knowledge. Want to thank each of you for joining us today, and everyone in the audience for taking the time to join us. I know everyone's busy. I'm wishing everyone a great end of 2021. We're coming into September next week. We're on the final stretch. So thanks to everyone. If you want to reach out to me or anyone on our team about what we do, we'd love to hear from you, and want to thank our panelists for their generosity of time. Take care, everybody.
Thanks, everyone.
Thank you for having us.
Bye-bye.